Welcome to the last part of the A to Z Masterclass, how to build powerful, viable breakout foundational models, basically on any market or any time frame in the world. In this Masterclass, we're building on E-mini Nasdaq 60 minutes. We went through a lot already. We have our foundational model. We validated it on a tremendous amount of very, very powerful robustness testing tests. So if you haven't seen that one yet, go back, because the entire previous video was about robustness tests only. And in this video, we will finalize our model and do one more thorough robustness testing check. So let's get to it. Hi, my name is Thomas, also known as the Mr. Breakout. I'm a breakout trading specialist and an internationally recognized trading author. I've traveled the world trading breakout strategies, and on this channel, I will teach you my own way of finding the right trading opportunities and making real money with breakout trading. Okay, welcome back, breakout trading funds, masters and specialists. So we're back to our foundational model on E-mini Nasdaq 1 hour. This is last video of the free masterclass. This is part 3 out of 3. So in the first 2 parts, we covered the prototyping phase. The entire previous video was about a tremendous amount of different robustness checks. So you need to watch the previous video all about robustness testing. And now we need to finalize this. And that's quite a simple step already, probably the fastest one, but you still need to understand this and do this correctly. We're doing all the work in the Breakout OS, A to Z. Basically, you can create robust foundational breakout models in minutes here, and I'm showing you how in this free masterclass. Okay, so in the previous video, we said, hey, we have fantastic foundational model on E-mini Nasdaq, 60 minutes. A tremendous amount of robustness tests were like, check. So we decided to move it to the next phase. Now, in this phase, we can already see if we could potentially improve the model with additional risk management. And by additional risk management, I mean stop loss or profit target, okay? Now, big warning. Foundational models usually do not get improved with stop loss or profit target. Why? And again, something you need to understand. Foundational models are built without any filter. So usually you build the foundational model, foundational breakout model, and once you're happy and you see it's really, truly robust, then what you do, you add a filter. And that filter usually significantly changes the map of your maximum adverse and maximum favorable excursion. That means you will potentially need smaller stop losses with filters or different profit targets with filters than what the base model, the foundational model suggests. That's why usually you do not see many improvements in the foundational model, but it's still worth testing, which is something what we do here. So what we can do is just we can now play with a different stop loss values, and we're actually seeing that, and remember, like Nasdaq is an animal. It's oh my God, E-mini Nasdaq is so volatile. It can make you super rich, super quick, but you also need to handle the risk and stop losses. And if you cannot, you can always trade the micro Nasdaq, which is 1/10 of the size. So we can see, for example, that deploying stop loss $3,000, it would actually improve the results from 95,000 to 100. So there are some improvements. Net profit drawdown from 0.84 to 620, but overall not massive results. Again, personally, I would leave stop loss and profit target after we add some filter, but we still can model. How about profit target? So we can add some profit target like 15K and elevate a tiny bit more. But overall, not huge improvements, not worth adding them at this level yet. We can see different statistics, how many times we triggered stop loss profit target. We can see profit target very few times. Understandably, it's a huge profit target. Still, we can try a quick small optimization here. Let's actually try some meaningful numbers like 3,000. Anything less doesn't work really reliably on Nasdaq. So we can do some optimization. We can use stop loss and profit target as a switch voluntarily. We can do actually even 21,000. Let's do step 500. Let's do a very quick optimization. Yeah, we could do like stop loss 5,000, profit target 17,500. Guys, these numbers are crazy. That's Nasdaq. Welcome to the world of Nasdaq, where you can make fortunes, but also not if you do not what you're doing. So it's up to you. Now, I wouldn't bother. I do not see significant improvements at this stage. I know that once we add a filter, probably will get better. So in this phase, yeah, no stop loss, no profit target yet. How about transactional costs? Well, we actually have huge average trade already, 172, which is enough to cover any transactional cost. But again, we can just click on the window and we can simulate transactional costs. And that's not a huge difference. I mean, like, you know, for a foundational model, yeah, there are differences, but nothing major. Don't forget, we will add filter, we will improve the quality. So, all right, yeah, we know that we can easily handle transactional costs with this foundational model, really easily. But I can see this already from average trade, 172. If I have 35 transactional costs on average, it will hit it a little bit, but not that much. I can simulate 35 here. Still very good and viable equity curve. Still nothing horrible. Again, once I add a filter and finalize everything, and then add maybe the stop loss and profit target, it will change the landscape. Then probably it makes more sense to see if we still, how sensitive are we when it comes to transactional costs. But with these average trades, and on Nasdaq you will always see high average trade, you don't worry much about transactional costs. So in this finalized phase, we pretty much decided, okay, let's continue. We're totally fine with transactional costs, like totally. And we do not need to deploy any stop loss or profit target at this stage yet. We do it. We're building foundational model. You do this once you deploy some filter. So now we need to go to the last step, and then that's the strategy validation. Now I know that many of you would be, let's add filter, and what it looks like with filter, and filters, like people love filters. I don't know why. Filter, okay, right? Like we have thousands of them. Some of them do improve, some of them do not. Nice, we can add filter, we can improve the strategy. I'm more like, let's combine more strategies together, do good for diversification. That does the job even better many times than the filter itself. So yeah, everybody would be about filter. Me, this stage, another robustness test. I told you everything is about robustness testing, and we need hardcore robustness test, like beyond what anybody else do or does. So here at this stage, we do one last robustness test called validation or cross-validation. And what we do, you saw that in the first video, and if you didn't see the first video, you need to go back and watch it. We actually set okay, we will work on NASDAQ. We will develop a strategy on E-mini NASDAQ. But we also saved files with the same data on E-mini Dow Jones, E-mini Nikkei, which is a completely different market from completely different country, E-mini S&P 500, E-mini S&P 400, and E-mini Russell 2000. What we do now, we load all of this data and we will cross-validate the exactly same model with exactly same setting on these markets. Never, ever seen before by this model. Does the true ultimate stress test, will it work on completely unseen other markets? So what I do now, I pick all these other 5 markets, I load them up. Now I switch stop loss because we did not deploy stop loss on the initial strategy either. And now Breakout OS will automatically, immediately cross-validate the model on all the other markets. And just by glance, I see this is already good. Now remember, cross-validation will never be the same, will never be perfect. That's not the objective. The objective is the overall tendency positive? Is the overall tendency good on similar yet different markets? That's why I'm not stress testing this on soybeans, on natural gas. We still want to be in the similar realm, similar space, but with completely different markets. And I mean, Nikkei is already completely different market, right? Like we're playing Japanese, arigato gozaimasu, index here. That's different. And still we're getting positive results. So overall, you see, works beautifully on EMD, works beautifully on RTY. RTY is tough one. It's more of a bearish index. Very few models actually pass RTY. YM still okay, ES quite good. So I can now go to equity comparison, and guys, except for the Nikkei, which is a completely different country, yet still positive, all the other equities are pretty much quite all right. At this stage, do not look for perfection. Be reasonable. Think like a trader. For trader, this is good. Last 3 years, fantastic. Every single market would work with its model last 3 years. We aligned by dates. It's just, guys, this is good. It's enough of a proof that we really, truly have viable, strong, foundational model. So if we look at a summary, we see that all time, 6 out of 6 markets profitable. Last 3 years, 6 out of the 6 profitable. Last 1 year, 6 out of 6 profitable. Fantastic. We have a viable model. We already done so many different tests of robustness. Each of them just confirmed this is viable model. Spectacular. I love it. And the ultimate, the hardest test, it's really a good one. Have a look. So for example, even the Nikkei, if I click, not bad, right? Like the last 3 years, not bad. Different country, again, different country. RTY, very nice. I would not expect this from RTY. ES, not too shabby. EMD, very nice as well. So this strategy passed the ultimate, this foundational breakout model passed the ultimate test. And that's really it. Now, where do you take it from here? This masterclass has been all about building foundational models. This is foundational model. This is a good, robust foundational model. Now it's up to you. You take the foundational model, you add indicators, which of course you need to add on in-sample data and then validate on out-of-sample, as I already taught you in the previous videos. And then you add stop loss and profit target, and you need to complete these models into a tradable strategy. But the foundation is here. The foundational model is robust, rock solid, quite amazing. And if you want to start with simple filters, day of week can be the easiest one. If I go here and I just only, let's say, have a look on the original market, okay, I hide all of them on the original market. Monday, fantastic. Tuesday, fantastic. Wednesday, fantastic. Thursday and Friday, failing. Failed. If I look at the last 3 years, have a look, guys. Friday, really failing. So where I would take it from here, I would basically just simply exclude Friday. That alone, if we have a look at Friday, that alone, it's a pretty weak day week, and that alone already is giving us another boost. And then add some filter of yours, get some ideas from this channel. I already assessed and shared so many filters. Just subscribe, go back to more videos, because there's so many really robust filters revealed here, including some proprietary from my hedge fund, and take it from here. So that's been the last part of this masterclass. You see, building foundational model is not a brain surgery. It's fun, it's creative, it's easy, and with tools like Breakout OS, I guarantee you can create them in minutes, if not seconds, and then start creating and prototyping your final portfolio really, really quickly. So what do you think? Let me know in comments. Give me a like if you liked this whole 3-part masterclass. Subscribe, because much more is coming. And what I actually plan to do sometimes in the future, I'm going to take some foundational models and from here, and then also testing them with different indicators. So could be another masterclass, like on deploying indicators and finalizing the model. So again, don't forget to subscribe. Give me a like if you like that. And that's really all. Have fun and create a lot of fantastic breakout strategies. Happy trading.
All you need are breakouts. Let your spirit